Wall Street stumble as AI euphoria fades and inflation fears resurface. US equity market closed sharply lower on Friday as investors' confidence wavered amid growing concern that the artificial intelligence trade may be running ahead of its fundamental, while persistent inflation anxieties reignited pressure on interest rate sensitive stocks. The technology-heavy Nasdaq Composite and the benchmark S&P 500 both declined by more than 1%, marking a decisive shift away from high-growth tech names. The sell-off was triggered largely by disappointing signals from major AI-linked firms and a renewed climb in US Treasury yields after Federal Reserve officials struck a hawkish tone on monetary policy. Markets were rattled after several policymakers who dissented from this week's interest rate cut cautioned that inflation remains stubbornly elevated, arguing that the economic backdrop does not yet justify cheaper borrowing cost. The remark pushed bond yields higher, reducing the appeal of richly valued growth stocks. Concerns surrounding the sustainability of the AI boom intensified after Broadcom issued a warning about narrowing future margins, sending its share plunging more than 11% and sparking broader fears about whether massive AI investment will deliver the profitability investors have priced in. Oracle added to the unease, sliding for a second straight session after issuing a weak forecast despite denying reports that delays were affecting its data center projects linked to OpenAI. The market's pullback was amplified by profit taking as major indexes had closed a record highs just a day earlier. With crucial labor market and inflation data scheduled for release next week, investors appeared increasingly inclined to lock in gains and reposition toward more defensive sector. Market strategists noted that the recent turbulence reflect a pause rather than panic after weeks of strong momentum. Cracks in the AI narrative combined with looming macroeconomic data have prompted investors to reassess risk. Defensive sectors such as consumer staples were among the few gainers, underscoring a broader shift toward caution. By the closing bell, the Nasdaq had suffered its weakest session in months, dragged down by semiconductor stock, with the Philadelphia Semiconductor Index recording its steepest one-day loss since October. Nvidia, another heavyweight in the AI ecosystem, also weighed heavily on the broader market, while several AI infrastructure and data-focused firms experienced double-digit decline. Despite the broader weakness, the Dow Jones Industrial Average fared comparatively better, posting a modest daily loss while still securing a weekly gain, highlighting the divergence between traditional industrial stocks and high-growth technology names. Isolated bright spots emerged amid the gloom. Lululemon shares surged after the company raised its profits outlook, while Costco held steady following stronger than expected quarterly results, suggesting consumer spending remains resilient, healing into the holiday session. Market breadth reflected the negative tone, with decliners overwhelmingly outnumbering advances across both the New York Stock Exchange and the Nasdaq. Trading volume also ticked higher than recent averages, indicating heightened investor activity during the sell-off. As Wall Street braces for a fresh batch of economic indicators next week, including employment, inflation, and retail sales data, the outlook remains delicately balanced, with AI optimism being tested and inflation risks still looming. Investors appear increasingly wary that the market next move will depend less on innovation hype and more on economic reality.